once the election result is finalized, Moody's is going to downgrade U.S. sovereign debt, and that could be a catalyst for Bitcoin to catch up.
Doesn't gold correlate with the dollar and with M2 as well? And gold and Bitcoin seem like the correlation broke down a couple of times recently.
Bitcoin is a chameleon. Its correlations change over time. It's hard to predict what it's going to be correlated with over the short term, over the long term.
But you really say it's because of the 21 million and it's fixed amount is out there, therefore the debasement of the currency favors that. I mean, that's...
Yeah, it's
some people call that fairy dust.
It's a non-U.S. asset. It's an emerging markets asset. And while we were all hyperventilating about the election over the last week, Brics had a conference in Russia. There's 6 new members of Brics this year. So Brics GDP is now greater than the combined GDP of G7. Of the 6 new members, 3 of them, Argentina, the UAE, and Ethiopia, are now mining Bitcoin with government resources. So there is tremendous urgency outside of the U.S. to find a way to circumvent the irresponsible fiscal policy that we've been running here in the U.S. In fact, Russia announced an initiative. Their sovereign wealth fund is going to invest in a regional initiative to build Bitcoin mining and AI infrastructure throughout Brics with an idea of settling global trade in Bitcoin. So look, someday, I don't know if it's 5 years, 10 years, Putin's going to die. We're going to look to reintegrate some of these countries into the world financial system, and they're going to be trading with Bitcoin. What are we going to be doing?
Okay. Yeah. Are you stunned?
No, I'm just processing.
You're processing?
Processing.
When will that be complete?
The processing?
Yes, so that you can make a comment.
When is Bitcoin going to be complete?
I have no idea. He sounds, what you think it's going to be a $100,000 asset soon, 200.
Yes. The smallest ever trough to peak rally for a Bitcoin cycle was 2,000%. If we do half of that, that'd be 1,000%. That'd be roughly 180,000.
When does this all go down? Not down. When does this happen?
When it all happen?
I think after the election will be a significant catalyst. You can see it front page of the Wall Street Journal talking about debt and deficit concerns.
Right.
Like Moody's is telegraphing this. Right. They want to downgrade sovereigns who
Where are you
have
like Kathy Woods?
What's that?
Like Kathy Wood. Where
my old boss?
Yeah. How do you feel about her predictions?
I don't think about them very much.
Do you think she's right? 500,000 is where she's at. By very soon.
We have a model that assumes that by 2050, this is very long term, that Bitcoin becomes a reserve asset that's used in global trade and held by global central banks at a very modest 2% weight. And in that model, we arrive at a $3 million price target for Bitcoin. Now, that sounds extreme, but that's a 16% compound annual growth rate for a couple decades. That's not really that extreme. So into the millions over the medium term is a high conviction call.
It does seem like this most latest run from 57 to almost 70 seems to be correlated with the betting odds improving. Is that fair to say in your view, Matthew?
Yeah, I agree with that. Trump is clearly the more pro-crypto and Bitcoin candidate, and VP Harris has not said a single word on it. So one doubts whether she truly understands it. But to your question about the correlations, the most significant long-term correlations for Bitcoin are a negative correlation with the U.S. dollar and a positive correlation with money supply growth, or M2. So clearly on the latter front, money growth has reaccelerated with the Fed pivot. That may be playing part of a role. Also some sellers' exhaustion. The German government and the U.S. government sold spitefully $2 billion worth of Bitcoin in the last couple months. That has eased, and I think the election is helping. Polls are helping.
Why did they do that?
German government seized a couple $1 billion of Bitcoin in a crime and sold it in August because they don't like it.
Because they don't like it. You just said spitefully. I wondered why you had that. Is that an adjective or an adverb? I don't know. It's maybe an adverb. Couldn't a correlation with the money supply explain why it seems to be just totally correlated with risk assets? If there's a lot of liquidity, risk assets seem to go up. Therefore, Bitcoin seems to go up and down. It doesn't seem to be a safe haven with risk assets. It seems to move totally correlated with, the NASDAQ or the Magnificent Seven or whatever.
The correlations change over time. Over a 10-year time horizon, the NASDAQ correlation with Bitcoin is a 0.19, quite low. Over the last 3 months, it's a 0.5, and that's a 2.5-year high. And that may be keeping some allocators on the sideline because they want to see it fall. Our bet is that this is a very bullish setup for Bitcoin into the election. We saw the exact same pattern in 2020 where Bitcoin lagged with low volatility. And then once a winner was announced, we had a high vol rally as new buyers come into this market. And that's the great thing about Bitcoin is that every day there's new buyers being born. It's kind of like the video game industry. The olds who hate it die off. The new folks are buying it.
Only so many hours in the day, 24 of them. And now the New York Stock Exchange wants you to be able to trade during most of them as well. The exchange announcing plans last week to extend trading to 22 hours a day, 5 days a week, despite some questions about thin volumes during those extended hours. Here to discuss the change is Lynn Martin. She's New York Stock Exchange president. Lynn, it's great to have you here. Welcome.
Thanks for having me. It's great to be here.
What spurred this change, and when would it be implemented?
So we initiated this change as a result of feedback we had from the market and the observation that the U.S. is increasingly becoming the center of the global economy. As a result of our clearinghouse, DTC, electing to extend their trading hours or their clearing hours, we thought it was important to extend the hallmarks of the New York Stock Exchange: the reliability, the transparency, the scalability, the resiliency of the New York Stock Exchange to allow those customers who choose to manage risk during the extended trading session. They're able to do that through the NYSE ARCA platform.
Should we expect, Lynn, as you've made this announcement, that we'll soon hear something similar from NASDAQ, from the other U.S. exchanges? Do you find it likely that you would be the only one to offer this, or do you think we're moving in the direction of having trading available pretty much around the clock on every platform?
From my perspective, the most important thing that we're focusing on, that our team is focusing on, is to work with the ecosystem. So to work with the market participants who are looking for a choice during the extended trading session, and to work with our regulators too, that our rules are approved to allow for those customers who choose to manage risk during this trading session to do so via the reliability, resiliency, the hallmarks that the NYSE provides to the market.
A lot of them think this is a step into the future maybe for the New York Stock Exchange, and to some they say, is this a step towards being the NASDAQ, towards being a fully digital exchange and one where the human element is more or less an artifact?
The human element has never been more important than it is at the New York Stock Exchange today. And it really has been that way for the last 232 years. Now, if I look at the amount of messages we process on our matching engines through our network, the amount of messages is approaching 1 trillion messages per day. However, the most reliable outcomes have that human overlay. So the role that the floor continues to play in the orderly trading of our markets has never been more relevant. And in fact, we've been able to quantify that with the amount of volatility that has been dampened as a result of the interaction of our floor with our robust order book and our market-leading technology.
Looking on the App Store, because you mentioned it, like he's beating most of the apps on the App Store.
Really?
It's kind of a crazy situation. So tell us what's happening. How many people have you onboarded since this all began, and what are you seeing?
Yeah, well, I mean, the demand has exploded. So we have actually in all election markets now, we have, I think, close to $200 million traded already. We are now number 1 on the finance app store. We just overtook Cash App, which has had the spot for I don't know how many years now. And on the global app store, I think we are just about to reach number 10. So we just overtook Facebook, Uber, Spotify, and a few other apps. I think we're gunning for number 1 for the entire app store by election day. So the demand curve is truly exponential, and we're seeing, as of this week, I think we're in the hundreds.
And what are the amount of bets that people are making?
So it's a very large diversity, and it's been interesting because people have been saying, that the odds are up, the Trump odds are up because there are a few whales that are pushing the odds up.
Right.
So I cannot speak about unregulated offshore companies, but we are regulated onshore, only Americans. And on Kalshi, actually, the average bet size is slightly larger for Kamala Harris than for Donald Trump. So it's actually more bettors betting on Donald Trump than they are on Kamala Harris.
And what are the amounts of these bets?
So it ranges. The average bet size is around $300, $400. But there are people that are doing in the millions. So
we're coming in for a landing, okay? I don't know if it's going to be a hard landing, a soft landing, or no landing whatsoever. But the only caution I put in all of that is part of the reason that's all true, and we talk about American exceptionalism, is we borrowed and spent $10 trillion in the last couple of years. So during COVID, we gave a lot of money out. I think they did the right stuff to move early and quick, but I think it was clearly overdone, which led to the inflation and things like that. But it's still that way, and now we're the deficit's 7%, which is the largest peacetime deficit we ever had, is $2 trillion. What I just said is true around the world, and I just my concern is inflation, in my view, may not go away so quickly. Okay, and so you might go into next year, 2026, where it starts ticking up a little bit like it did in the 70s, because. The Fed always says it's data dependent. Well, of course they have to be data dependent. Can you imagine them saying, we don't care what the data says? But the short-term data is deceptive. And so when you say dependent, I think we overreact to short-term data. But there's also future data. Doesn't exist yet, but you can predict it. Like huge fiscal spending, the remilitarization of the world, which is inflationary. Demographics is inflationary. The green economy is inflationary. The restructuring of trade is inflationary. So I see a lot of inflationary things in front of us. They haven't all happened yet, but they're going to happen, and I think they will probably have an inflationary effect. So in the back of my mind, we're prepared for that. I don't think it's a big deal if it's 3.5%, the 10-year bond goes to 5 or 5.5. I think it becomes a big deal if it goes much more than that, and people are caught off guard and credit spreads start to gap out. And it's only a really big deal we have stagflation, i.e. a recession with inflation. And I would not rule that out. I'm not talking about next year. I'm not making a forecast, but in terms of managing our exposures, all of us, I'd be thinking about that a little bit.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And we have Matthew Siegel from VanEck giving us half the truth. Not the whole truth, but definitely a lot of it. And they acted surprised. But what have I told you time and time again? After the election, the movies are about to be stepped up. And he stated Moody's would downgrade the U.S. debt after the election. Of course, they cut him off. And then he talks about the Brics. The Brics are ready to use digital assets, but he leaves out ditching the dollar, and then also the fourth industrial revolution, the machine takeover. And then he was asked about a prediction for Bitcoin. His is about 3 million over the next few decades. And again, they're saying this because of the rise of the machines. And remember, the Crypto Teacher told you. And we have the New York Stock Exchange ARCA moves to 22 hours a day, getting ready for the digital economy, that real-time settlement, that tokenization, and it will eventually be 24 hours a day, 7 days a week. But remember, guys, we're in a plan. It moves in phases. And then we have the Kalshi app exploding due to the election. And we know when it comes to Babylon 2.0, betting, gaming, how big it's going to be. People sitting at home getting free money, the circuits and the free bread inside the metaverse. And remember, the Crypto Teacher told you. And then we have JP Morgan's Jamie Dimon on all the spending. All this inflation is not going anywhere. And he talks about inflation inside of a recession. We've been in a recession since last October 2023. Right now, we're in a Great Depression. And remember, the Crypto Teacher told you. And we have the Treasury borrowing is out of control. $546 billion for the fourth quarter, and then another $823 billion for the first quarter of 2025, but listen closely, due to a potential government shutdown. And the deficit has to be cut. And the only way we don't get a shutdown is either Congress is all red or all blue. So we're just going to get your popcorn, sit back, and let it play out. And we have the Biden administration says that AI adoption must be accelerated for our military. Yes, guys, you heard that correct. And we have Janet Yellen speaks on the dollar being the world reserve currency. Says that she see no competition. She doesn't see the Brics right around the corner. Guys, she know it's coming to an end. But by the time it comes to an end, she'll be riding off in the sun as the dollar loses its spot. So we have the fall of America to Babylon and the rise of the Brics nations led by China, along with that digital yuan backed by that digital SDR. And remember, the Cryptoteacher wrote about it and told you about it a long time ago because he knew when it came to the NWO, it's all planned out. You have a wonderful day.
$546 billion in the fourth quarter of 2024. That's $19 billion lower than announced in July 2024 when they put that estimate out. That's because they had a higher cash balance, as in more money in the bank at the Treasury, offset by some lower cash flows. Now, here's the forecast. $823 billion in the first quarter of 2025. That's the largest on a nominal basis for the first quarter, but it also comes with a big cash balance they're going to keep. I'll talk about that in one more second. They borrowed $762 in the third quarter of 24. That was $22 billion higher than the estimate because they had more in the cash balance and offset by higher net cash flows. One more thing, they expect to have a cash balance. I'm just looking up these numbers here of, I'll give it to you, Scott, $700 billion in the first quarter of $850 billion in the first quarter 25 from $700 billion in the fourth quarter. They are kind of squirreling money away, Scott, because as you know, there's another debt ceiling fight brewing for the first part of the year.
Let's focus in a little bit here on the Treasury's borrowing needs. I think everyone knows that at some point, those borrowing numbers are going to have to come up significantly. It looks like, at least for the first quarter, they seem to be guiding in that direction.
Yeah, I think that's right, Romaine, and thanks for having me on this afternoon. In our baseline and the borrowing estimates we got, I think for this quarter, we're not too far off from our expectations, and for the first quarter, probably a little bit larger. But I think what we know is that for fiscal year 25, which has just begun, the Treasury is probably in a pretty good spot with its long-term auction sizes, but that the closer we get to August and November next year, as you sort of quoted from Ed Yardeni, there's a strong likelihood that Treasury will have to resume its increases to long-term auction sizes, probably in both a magnitude and duration that looks just as big as we saw last summer through this spring. But in our minds, we think the Treasury is probably in a good spot for the next 9 to 12 months or so, even though these announcements for the first quarter were larger than expected.
I mean, if we just take the benchmark 10-year, which, of course, right now, back at that 4.2, 4.3 level, in a time where we were expecting that number to come down because of the presumption of additional Fed rate cuts, how is this all going to balance out? If the Fed does continue to cut rates, but the Treasury's borrowing needs continues to go up, is that just going to keep us pinned in a tight range on the Treasury notes?
Yeah, so I think a lot of this increase that we've had over the past month or 5 weeks or so, Romaine, has been a function of the action the Fed took last month by delivering an aggressive 50 basis point cut. I think it was a sign to markets that the Fed does not want this expansion to end prematurely, and there's a likelihood of better growth and inflation outcomes down the line, meaning less easing. And we've seen that because the terminal Fed funds rate priced into markets has risen from about 260, 270 in the middle of September to something like 350 right now. So it's certainly reflective of fewer eases coming down the line. But to your question on what it means when we intersect monetary and fiscal, in our minds, the primary driver of Treasury yields is always going to be the market's medium-term monetary policy expectations. But away from that, we do think that for a given level of policy rates, because of this 100+% debt to GDP ratio, and a Treasury buyer base, which is shifting from price-sensitive or price-insensitive buyers to price-sensitive, it's just going to mean long-term rates remain more elevated for a given policy rate than we've seen over the last 15 to 20 years. So in all else equal, we really think it results in steeper yield curves as well.
About the Biden administration, saying that the US must accelerate its adoption of AI for military and intelligence use. In a new national security memorandum, the White House outlined efforts to maintain an edge over rivals and increase safety.
Also asked about the dollar, the status of the dollar. So I believe that the status, it is important to the United States that the dollar is and remains the world's primary reserve currency. And the status of the dollar, in my view, is really grounded in our strong macroeconomic performance, low inflation, institutions, strong capital markets, rule of law, and very deep and liquid capital markets. And there really is no other currency that I see as being a candidate in the near future to being able to replace the dollar. So I feel confident about the dollar's status.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told his members that this has been part of the reason here that the system is kind of clogged up, if you will. During that auction that we saw a little bit before, the attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets. Now,
it was not just a poor auction. It was absolutely lousy. And you know, when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Tam Save the Village. Part 2. King Joshua and Drama Tam Save New York from COVID-33. Part 3. King Joshua and Drama Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.